Welcome to a new update in which Bitcoin has been dropping down heavily and is currently swimming around 35 to 36k. So in this update I'm going to give my view on the markets, but I'm also giving my view on the behavior of people at this point. And we're going to look at some metrics that you could be using. I'm not going to judge the metrics, I'm just going to look at them. And that's what we're going to do in this update. Before we're going to continue, make sure to subscribe beneath. Also make sure to like this YouTube update if you enjoy the content. Make sure to follow me on Twitter and Instagram where you can find daily content on the cryptocurrency markets, as that's the platform, or those are the platforms that I'm actually producing content day in, day out. So when we're looking at the markets, and if I'm looking at social media and also the chats that I'm actually in, right now the fear is on a very high level. And if we're going to the data in a little bit, we can see that the fear is even higher than what it was in March 2020. And right now people are in the position to start blaming and to start panicking, in which the only outcome is going to be that it's going down. Yes, we are in a loss. Everyone is underwater, or most people are losing money. Except for the traders that are in a short position or when you are in USDT. But let's assume that most of the people in the markets are losing money at this stage, which is normal. You're underwater. But what I would like to say is that there is no point in constantly refreshing your portfolio. There's also no point in constantly thinking about how much money you are losing, because it's paper losses. Right now the emotions are taking over. That's what I read on social media. And that is triggering a ton of people to actually make a decision that they are going to base into that split second that they have or feel their emotions. That's also what I see in the reactions towards me. People start shooting or start blaming me about a prediction I've made about the bull market, but also a prediction that I've made about the low being in on December 4th. That one was wrong, definitely. We have been assessing the markets afterwards, in which we have been concluding levels to look at. And if you were watching me during the week, then you can see that we were saying, hey, if this is lost, then I'm assuming we're going to go lower. The bull market price predictions, I'm still sticking to that, given the fact that I'm assuming that we are not done with this cycle. We are seeing an overreaction to the downside, not only on the crypto markets, but also on the equity markets. But if you're starting to shoot towards other people on social media, or if you're starting to start selling at this stage after we've seen such a heavy correction and after we've seen such a downwards move as the past 24 hours, I can tell you this: you're not going to make it. You should stop trading, you should stop investing, you should just work, save your money into a savings account, leave it there, not do anything at all. You are not going to make it. That is what I think for most people that I see commenting or see blaming or see shouting. Everyone is actually having some pain. But right now, if you are feeling that emotion and you're feeling the pain of losing money, there's also a bunch of people that are already in profits, but they are losing those profits, right? But if you're losing money, there's no point in having those emotions. Why don't you just turn those emotions into energy that you can use to construct a plan that you can actually make money out of this? If you were buying Bitcoin or altcoins because 2 months ago people were saying that we were going to see 150k in 1 month, it's up to you to change that behavior and to adjust your strategy. If you were the one buying one altcoin and going fully all into that one without any liquidity left, you are the one to blame. If you are the one, or if you are deciding right now to start selling after Bitcoin has been correcting more than 40% already, you are the one to blame. It's not another one you can shoot or can blame for the actions that you have made. So I think the past 3 months are a pretty big lesson for most of the traders that came into the markets in 2021, or also for all the people that are already in the market since 2017, is to start understanding how the psychology and human behavior works. It is tricky, it is difficult. Trading isn't easy, and the markets will be even more volatile during this year. This means that also the equity markets, the volatility will start increasing because of all the factors that we have to take into account into the price action that we are seeing. Also next year will be very volatile, and that's probably because of the fact that we are in the end game of this entire, well, let's say cycle, bull cycle on all markets. So what you should be doing is that you're going to reflect all the actions that you have been doing. I think that most of the traders are not even evaluating their own actions. You should do that. Why did you decide to buy in November or October? Why did you decide, or are you wanting to decide to sell right now? Reflect all those actions. Start understanding your emotions. Start understanding why your emotions are triggered by social media instead of just using plain price action to derive a strategy out of it. So I think that is the core of this update. It's a short update, but that's the core of this update, in which that is something you should focus on instead of doing something randomly or seeing crypto banter or some other random influencers on Instagram saying something about a random altcoin and you just throw in all the money that you have. I think that should be, let's just leave that behind and start building actual strategies in which you can be building your way up consistently. Let's just do that. Let's just start avoiding attacking others. Let's just start avoiding selling at this point or feeling the trigger to finally start selling after this correction, because that is just also not the right to do so. Let's get towards the data and a few points that I want to discuss in this update. So let's head towards the charts. So in this update, we're going to show you a few interesting metrics. I'm not going to judge on those metrics. I'm just going to say what I see or what you can see, and you can base your decisions out of that. First one is this tweet from Macro Charts, which is Nasdaq investor sentiment is worse than it was in March 2020. That's an extremely aggressive bearish posture. Bearishness has fallen to such an extreme that it supports a significant stock market rally. As you can see in this picture, the price action is this blue line on the Nasdaq, and the red line is the actual fear in the market or the bearishness in the markets at this point, right? What it shows is that a data point is currently at around minus 70%. While the actual low was of minus 60 during the March crash in 2020. So the current sentiment on the equity markets is lower than when we crashed during March 2020, and that is definitely what you can see on social media as well. So that is the first one that I want to discuss. The second one, combining with the first one, is the Crypto Fear and Greed Index, currently at 13, but I think that we're going to be below 10 within the next few days, especially since the fact that social media and also in the chats the panic starts to increase, and also media is covering the current correction of Bitcoin. Now, when we're looking at the price action of Bitcoin in itself, what can we see even more? We can see the next factor. We've lost 41k. We are currently at 35k. The price action has seen a downward drop yesterday and it started to accelerate. What we can also see on the index is that the volume is on its highest point yesterday in the entire correction. What we can also see is that the Bitcoin RSI is currently at its lowest point, as you can see here, since the actual crash of March 2020. The daily is on its lowest point since the crash of March 2020, and before that the lowest point was this actual move in September 2019 and the crash in November 2018. So it's the lowest point since then. What we also know is that Bitcoin has been acting in this range between 60k and 30k, and right now we are on the lower side of that range after this fake out that we've made above 60k. If we're looking at the CME futures, we also derive some interesting data. First of all, if you look at the daily, you can see a 38.1, but the CME closed at 36 36.7k. What we can also see is that we still have this gap from 33 to 34.5 that is still unclosed. So tomorrow evening the CME will be opening up again, and then we're going to see whether this one is clearly closed, and we still have the other CME gap at 36.7k. Then also the total market cap of crypto is currently also showing this heavy correction, and as you can see, we've got this level that we're currently moving into, which didn't really got a retest around 1.6 trillion, and then we've got a next area which is at 1.2, but also the total market cap of crypto is currently on its lowest point since the crash in March 2020. I'm not going to say anything about it, that's just the facts right now. Tomorrow we're going to have another update about the markets and some on-chain analysis. Make sure to subscribe beneath, like this YouTube update. I'll be back tomorrow, and I'll be back Monday with the live stream at 7 p.m. Central European Time. Make sure to be there, as that's where we're going to share way more alpha. Have a wonderful day, have a wonderful weekend, and I'll see you again very soon.